Property Tribes TV on location, and we're coming to you from the Canary Wharf Property Investor Network meeting. And I'm joined by somebody who's become a familiar face on Property Tribes in recent months. It's Kevin Wright, mortgage broker. So welcome, Kevin.
Hello, Malcolm. Thank you.
Now, first of all, the really exciting news today is that the EU have decided that they're not going to get involved in buy-to-let regulation, which is really good news and some much-needed good news for us investors, isn't it?
Absolutely, it is. Yeah, I think it's any government involvement tends to be bad news, whether it's UK or EU. So if the EU are going to keep their nose out the buy-to-lets, that's good for all landlords, I would say.
It is. And some other news we had today is that interest rates have been held at 0.5%. Yeah. But the possible good news on the horizon there as well is that they're more likely to go down than up. Are you of that opinion?
I think they are. The Bank of England has a obligation to keep inflation at 2% or in that range. However, they have a bigger obligation to get the economy out of recession, and so interest rates will remain low until a recovery is secured and is safe. Now, different people will tell you that will be at different times. Could easily be 2015 or beyond.
That's the way it's looking, definitely.
Yeah.
Now, on the threats front, obviously we've got the looming Greek debt crisis.
Yeah.
How could that affect us in the UK on an everyday level as buy-to-let landlords?
It's difficult to see exactly how that would play out. What it would do, it would act as a further suppression of interest rates, because again, the economy would suffer. I think it would probably tip us further in recession. If you know, and I can only listen to what other commentators say, and try and form a judgment from that. So, and if we're in recession, then again, interest rates have got to stay low until we recover. Could that mean lower property prices? Possibly it could. Could it mean more redundancies, therefore more people have to sell? Yes, it possibly could. So I think perversely, possibly generally good news for landlords.
It's just that we're in uncharted waters, really, aren't we? And I don't think anybody really knows how it's going to play out. But would you see the breakup of the euro as a negative impact on property in the UK?
Would it force prices down? It could well do. But then no one, landlords generally tend to buy for the long term. And again, a loss is only a loss if you crystallise it.
Indeed. Now, on the mortgage front, are there positive moves there? I hear, a little bird tells me that there's an 85% loan-to-value product coming out tomorrow.
Lenders move the goalposts to suit themselves. There was an 85% mortgage around until a few weeks ago when they bought it. So you find different lenders jockeying for position. The difference now is that there isn't the compulsion to chase market share that there was before the credit crunch. So lenders are much more circumspect about what they're offering. So if there's a new deal out there, then a lender is going to try it for a while, and if they don't like it, they'll pull it. And that's exactly what happened with the last 85% deal. It was launched at the back end of 2011, and it was pulled in 2012. So you will find these little deals that come onto the market, but they'll probably just as quickly go off again.
So good reason to stay in touch with your broker.
Absolutely, yeah.
Now, I know where you're really busy is you coined this word haircut. Which
I borrowed it, didn't coin it.
Oh, sorry, yeah. I learnt it from you, Kevin.
Okay.
So you were the first person. But that's really with commercial lenders. Can you see the possibility that buy-to-let lenders may consider what I would call a short sale if somebody went to them and said, look, I want to redeem this mortgage, it's 100,000, but I give you 75 to clear it off. Can you see that happening?
No, not really. I don't think that's a viable proposition. Most buy-to-let lenders are in the market now because they're happy to be in the market. the commercial position is somewhat different. Most commercial lenders are pulling back from property. One major commercial lender, they grade all their sectors as red, amber and green, and property with that particular lender is most definitely in the red, any form of property, whether it's investment, development. So they are pulling the plug on commercial loans, and we help people get a significant amount written off in return for a quick settlement. Will it transfer into the buy-to-let market? I can't see it.
Well, it could be good if it did. Quick final question. You're here tonight networking. How important is both off and online networking to you, meeting new clients?
It's probably my sole marketing strategy. I don't advertise, but I do network.
Brilliant.
I do probably about 8 to 10 of these meetings a month, and it puts me into contact with some great people. Equally important now is online networking, and I've found Property Tribes has been a good source of new business for me.
Brilliant.
So yeah, absolutely.
And all through just sharing information, not selling or advertising, you've just been sharing.
Very important lesson to learn is that if you broadcast what you want to sell people, you'll turn people off very quickly. If you just share knowledge and just play the waiting game and just wait for people to contact you, eventually it comes. And actually it's really nice to share knowledge as well.
Fantastic. Well, it's a joy to have you on Property Tribes, Kevin, and I know along with Lisa Orme, I regard you as a great authority, and I've really got a lot of value from your posts. So thank you for the generosity of sharing with the community. We really appreciate it.
I'm happy to do it, and Lisa's great too.
She is. Lisa's brilliant. Hello, Lisa. Hope you had a nice holiday.
Hi, Lisa.
Anyway, that's Property Tribes TV, and we've been talking to Kevin Wright, mortgage broker. Thank you for watching.